Are you ready for what should become an absolutely wild week of trade with AMD, Microsoft, Meta, ARM is reporting earnings, and they're now pretty influential over the semiconductor market. Qualcomm could be a soft watch for the semis. You're also going to get Amazon, Apple, the old guard of the S&P 500 and the Nasdaq, Intel, a soft watch very similar to Qualcomm, and we're also going to get some heavier hitting energy companies before the bell on Friday. But it's not just that. Let's take a look at the economic calendar because we're going to learn a whole lot more about the labor situation this week as well. JOLTS kicks us off on Tuesday at the 10 o'clock time frame. The ADP non-farm comes out at 8:15 on the Wednesday session. And you'll also notice the Fed is mixed in this week, Wednesday, usually at the 2 o'clock time frame, and 2:30 will be the press conference from Jerome Powell. Now, we're not really expecting much of a surprise here on the highly anticipated pause from the Fed funds rate. However, does Jerome Powell start to hint at when, the timing, of potential rate cuts? And how aggressive will the rate cuts be? Now, it's my belief that it's likely going to be either September or the following meeting, but do they push out the hints at the rate cut until sort of the Jackson Hole Symposium, which is at the end of August? It's something to consider, and the market's definitely watching out for that. As we scroll into the end of this week, of course, on Thursday, we get the typical initial jobless claims. I would also point out the manufacturing PMI over here. And then on Friday, it's the full labor report, the government reads. We get the hourly earnings, we get the non-farm payroll, as well as the unemployment rate. Does the unemployment rate start ticking higher? Is that going to sort of force the Fed's hand into cutting rates as soon as the September timeframe, even if they don't hint at anything in the July meeting here? It's certainly possible, and the market will be looking out for that reaction. So it's a loaded week in terms of information that's coming out, and I do just want to sort of preface today's analysis with, hey, with all these catalysts, a lot of outcomes can possibly take place here. I think managing expectations is paramount for this upcoming week. We're going to kick things off with a very sort of abbreviated analysis of the S&P 500 weekly time frame chart. We'll go through the time frames, but really focusing on trend and levels here, not so much additional indications. On the weekly, we are on an uptrend. We know that this pullback is over our line in the sand, so we now have lows, higher lows, and if this holds, which we do not have a strong indication of just yet, but if the low of last week holds, it's certainly a higher low in the trend sequence. We've repaired the previous set of weak lows. I call these soft higher lows, correct? Because in this 2-week balance range, we never actually flipped into a daily downtrend. We are pulling back from the highest high in the trend count. It's the all-time high. So I'm pretty optimistic that the weekly trend is going to remain in the upward direction so long as we're over this key level right here, which, as we know, is closer to 532. I do like, from a structural perspective, the fact that this lower wick is starting to form. It would suggest that buyers are stepping up off the lows of the weekly range. Now, it is a red-bodied bar, so it's not like the buyers were able to push back up through the opening print for range expansion in the upward direction. But let's take it on down to the daily time frame and just see what's going on from this perspective. So daily trend is definitely down, and we know that, right? So we have highs, and we talked about this on Wednesday. Tuesday of this week yielded nothing more than a lower high, and now this has the opportunity to actually act as a lower high. Notice that from a structural perspective, we have back-to-back inverted hammers where in the upper wick of both of those bars, it wouldn't seem as though the buyers have the utmost confidence there. If we had stronger buyers, you might have expected a stronger close, specifically on Friday, to squeeze out some of the shorts who were late to the party on Wednesday towards the lows, and certainly on the Thursday towards the lows. Now, we did close. Let's give credit where credit is due. We closed way above the closing print and even the open from the Thursday session. So is it possible that you could see a break of these sort of equal highs here, Thursday and Friday, for a possible gap close overhead? I think the answer is yes, and that counter trend move is something I would be looking for into the early stages of this week, perhaps on Monday, prior to any of the catalysts from your AMD, your Microsoft, and as we start talking about fundamental labor reports, right? So here are the levels to be watching. If we break the two equal highs, it's over 547. You're going to trade into this gap close. I would not get too hung up on the Wednesday high of day. I'll show you why in the market profile. It's just a string of single prints up here from A period. So really over 547. Please respect 549.50, but I would really be thinking about the full gap close into 553.20. When we get here, certainly because we are in a daily downtrend, I would be on the lookout for the possibility of a lower high. If the market goes for a gap fill reversal, you would then want to see, if you're trying to be optimistic for a stronger trend reversal on the daily to cement the weekly higher low, right? We need to flip back into a daily uptrend to confirm the weekly higher low. We would want to see a higher low anywhere on a pullback over 547. If you're bearish this market, of course, what you're looking for is just a breakdown right back to the equal lows. I would argue with the uncertainty of the earnings season coming up, and of course, the big election coming in the next couple of months that's top of mind for the market. Markets don't like uncertainty. Is it possible that this lower high is produced and we maybe flip into some sort of choppy balance down here? I think it's a non-zero probability, right? I'm thinking that it might be higher probability than a stronger reversal back in the upward direction to sort of miraculously make it back up to all-time highs, if not continue pushing towards new all-time highs. So I'm not trying to be doom and gloom, but I am just sort of reading the tea leaves here in terms of the daily trend still being down and having the opportunity to yield some sort of lower high on the gap fill reversal. Once again, 553.20. If the market's going to remain really bearish, so here's an opportunity where there's just no upside to be had, you could get a break of 547, reject completely off of 549.50, and then from there, I would say any sort of flushes of your Wednesday low of day, that'll be your gatekeeper from back here at 540.30. You're looking for not only equal lows, but the weekly higher low line in the sand we were just describing, which is at 532.50, right? That's this sort of zone from back here. And if you were to extend this off to your left, doing something like this, it's right through the top end of this prior balance as well. Anything beyond that, you have this thin structure to get down through at 529. I'm pretty hopeful that because we're just doing an abbreviated analysis this weekend, we might be able to put out some more updates as the week wears on, especially with some of this earnings volatility. So let's take it on down to the hourly time frame and see what else we can learn. So on the hourly, we can really start to see with clarity how this reversal might actually take place. I mean, this, as everybody can start to see, is easily some sort of double bottom. And your neckline is this 547. If you were to break out over that, again, you can see the thin structure. I'll show you the single prints on the market profile, and then it's a gap overhead. So still very interested in that, but I do want to make a quick comment about the Friday afternoon close. Now, in full transparency, I was not around on Friday, so I'm not going to pretend like I was watching this action in real time. However, with some hindsight, we can see into the close that there was some support over 543.20, and that is technically the beginning of a higher low here. If the market can consolidate in this zone, I would be thinking about a higher low on the second half of the double bottom, neckline breakout, gap close overhead is very interesting. So how might you participate? Well, if you can spot buyers stepping up at 543.20, great. There's a long here with tight risk reward up to the neckline, trying to hold some runners into the gap overhead. I don't know if you guys can hear that bird outside, but it is just parked itself right outside the window. It's actually quite lovely on a Sunday morning. Hopefully you're hearing that squeak just a little bit. If the market wants to consolidate here without offering the higher low at 543.20, it's the Brigade bolt over the neckline, 547, for follow through in the upward direction. That's what I would be watching for to the upside for the counter trend move to possibly unfold. If the market fails to hold on to 543.20 and consolidates in the lower portion of the double bottom, I would not be as convinced that this market is trying for the counter trend move to close the gap overhead. Instead, as we mentioned, any consolidation here, probably looking for at least the equal lows, if not follow through into the weekly higher low at first, at 532.50. That's your downside in the S&P 500. What do we have for very quick supporting evidence indications? Well, in the internals, or at the internals level, I should say, we did see strong volume inflows on Friday. The sort of advanced decline line was in trend higher zone. And again, full transparency, I'm not trying to pretend like I was at the desk on Friday. I was not. But in hindsight, this analysis does look decent for those buyers stepping up and, again, closing over Wednesday's low and the Thursday open. You have a index score, which was mostly positive through the duration of the session, however, not in a very strong zone. And the cumulative build was positive here, but definitely not up towards 5,000. So, again, I do believe at this point, looking at the internals here, that a counter trend move could be available. Another reasoning for that is if we take a look at the sector ratio grid, this has fallen off of a cliff. We know that the tech sector has slipped, but look at the relative performance of financials. This is a really heavyweight component of the S&P, so I like the relative outperformance there. Healthcare, also a heavyweight component, however, D for defensive. And these are the small concerns that are starting to step up at the consumer staples and utilities level down here. A little bit of risk-off rotation, but sort of to be expected as the market's pulling back a little bit more aggressively. I do want to show you a couple of brief indications here. So interest rates backed off on Friday. A key watch this week is going to be whether or not we remain underneath 43.33 on the TNX. That's 4.33 on the 10-year yield. If we take a look at the credit spreads, they're still somewhat divergent with the longer term versus shorter term spreading in different ways. And one of the sort of thought processes behind this is just that the LQD corporate grade bonds are a little bit better quality, right, than the HYG junk bonds, so to speak, or at least that's the perception, if you will. And the fact that this is moving higher might be something, a bearish indication, really, to be keeping an eye out as these earnings announcements come out. If corporate grade starts to take a hit and these credit spreads expand, might indicate a little bit more of a flight to safety. I wanted to reiterate that in today's session. But just as bearish as that is, I mean, if you look at the HYG in isolation, it's completely offering a bullish divergence to the downtrend that we have in the S&P 500. So is this bullish to as sort of like a counterweight to the credit spreads? It would seem like yes. And then I want to finish here on breadth indications because I do believe this is fairly important as well. If you look at new highs versus lows, as the market's been pulling back, it actually has improved here and remained over the zero line. That does strike me as a positive indication. And you'll see the same thing here out of the SPX A50R, trying to produce some sort of higher low. I like the indication there. The easiest one to watch is just your RSP. Look at the hold here outside of the sort of balance range. The fact that this is a break, higher low above, and possibly continuation back to the upside really speaks to that counter trend move here and being a believer that it's at least possible, maybe just for the Monday session, right? We know that earnings from Microsoft, AMD, all those heavy hitters can certainly throw a wrench in the analysis. Real quick check-in on the VIX. It did pop up and over the 15 handle, so your watch here is whether or not it drops below the 15 handle. If we're above, it would continue to speak to uncertainty in the marketplace, in my sort of belief here. And I don't necessarily think that we want to be aggressive on longer-term long theses to begin if the VIX is just steadily over that 15 handle. I do quickly want to finish on the QQQ just because it's such a heavyweight component and it sort of acts as a market leader, but we're not going to do too much here. We have a certainly daily downtrend brewing. Notice that your Friday close was not nearly as strong as the S&P 500. You've got yourself a bit of a doji here, indecisive doji. It's underneath the Wednesday low of day and the Thursday open. Not as convinced that structurally speaking, you have as much progress or solid level to stand on beneath us. We do have this as like a weekly higher low zone, but you know, if the counter trend move happens in the Nasdaq, I think that we can all agree, and just looking at the chart structure, this should be clear. We had thin structure on the way up via a CPI gap, and we had thin structure on the way down via earnings gap and go. So if there is a move over 467, then I would really be thinking about the counter trend move, and it would certainly speed up and add fuel to the fire in the S&P. But you're looking at nothing more than a huge, like way stronger lower high opportunity out of the Nasdaq versus your S&P 500 at 547. So please be mindful of that in the upward direction. If we get the counter trend, certainly fishing for short opportunities on the back test of the gap, the upper edge of the weekly expected move, the daily 50 SMA. The target would be back down here towards the weekly higher low zone at 459.50, excuse me. If we're just consolidating down here, let's call it for what it is, nothing more than a bear flag looking for breakdowns. And of course, we'll update you on Monday, hopefully, as that market unfolds. And be mindful Tuesday, the whole 9 yards, earnings. We're going to get important labor market information, right? So that's my abbreviated analysis on this weekend where we're enjoying music over at the Newport Folk Festival. So have yourself a green trading week. Check in back to the channel for sporadic updates throughout this week because of all the volatility we're expected to get. And we will be back at the desk in the penthouse for the pre-market prep tomorrow morning at 8 o'clock. Back to business, getting the job done. Have a green trading week, and I will see you in the next one.